Hey, hello, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow. Today, the stock market analysis show, where we very quickly wrap up what exactly happened using technical charts and then try to conclude on a plan for the coming day. So, what kind of day we had today was flat, indecisive, slightly green on Nifty, doji, and doji candle on the Banknifty. So there is a resistance. Market is recovering from a sharp fall that happened a few weeks back, and but it's not at made it into the bull zones yet. Right? If you're not subscribed, please subscribe right away and share to friends and colleagues so it reaches to maximum. Let's get the charts. So that's a wrap up. We'll just see the charts first. That's easier and quick. So here we have the Nifty charts. You can clearly see that the candle is formed is not doji, but kind of a spinning top. Spinning top does not make sense at mid of a rally. It only makes it becomes bearish if it is a very top. But it still is a small body. Small bodies are all indecisive, so there is indecisiveness in there is big bull fight happened during the day's what indicates. Did not manage to close above the 50 exponential moving average, but holds the 20 exponential moving average which it had conquered yesterday. And Banknifty, the first was so basically no, it's going in a channel. It would hit the trend line here, the trend line that comes from the top. So that would be around 575. That's where the resistance would come in, real resistance. And if that's breached, probably you can say that it's a little more closer to the bull zones. But the real challenge would be at 850, 800, that zone where there is a gap confluence and as well as there is a lower high pattern, probably of a breach of that. So that's where the actual bullishness could begin if it all happens. So the resistances are likewise, right? 19500 would be a hurdle, 570, 600 would be a hurdle, then 19800 would be a hurdle. Downside supports can be seen at the 20, the 100 and 200. All these are supports. That would mean that you will get some support at 19300, 19200. After that there is a gap there, 19300 and 200 nearby zones, and then there is a gap, major support of 200 exponential moving average down at 18800. In between 19009 can also act as a support. So that's about Nifty. So Nifty, if you just get into these 1 hour time frame, you can see that it's moving in a channel. So you mark the channel, and if there is a breach from here, and if it hits this 19600 zones, and then you can say that one step more further into the bull zones. Let's make it off. So that also means that it can go to the bottom of the channel, right? And it can come to the 19300 once again. Take support here and then again once again move up, or it can break out from here. So you never know, zigzag up and move within a trend line channel. So 1 hour charts of the Nifty. Let's get to the Banknifty. Same, it's a small body, indecisive candle, right? But closed red, while Nifty closed flat of 36 points up at least, as in 0.2%. But Banknifty is minus 0.2%. So selling pressure is clearly there at this 43,800 swan, very clear. 43,700, 43,800 has got huge selling. So that is where exactly the breakdown happened on October 23rd, when the big vertical fall of 3 days happened. So that's on. Getting into that is the first thing, and also it just could not get above the 100 and the exponential moving average. So clearing that would be in confluence with the rounding number of 44k. So that was the major resistance, 44k, and before that 43,900, and so that the two moving averages there could be. So 44k is the first major resistance upside. If that is cleared, then you may have to look at the 44,700 for the price action of the lower high to be breached, to be negated, right? So that will be the next. But for tomorrow, 45k is what we'll look for on the upside. Downside, the previous low of 43,300 could be good support, and if that's gone, then it can go as low as 42,000. That's how it is. Candlestick is boom, so it's happening the same thing. It's all within a channel. We slipped from that main box and then fall into another channel. Right now we are moving up. It could go as far as 45,000 without any issues. Now if it climbs above the 45,000, then we are in a rally. Back in a rally, you can say. Still then, you never know what happens. So that's it. So foreign institutions might have been selling today also, as usual. The 16-17 weeks they're selling. Today's data has not come in, but definitely they might have been selling. And support resistances we already seen. VIX unusually behaves flat. Yesterday also it was flat and maintains a lower regime of 11.2, not spiking up. That means market is probably not ready to fall. Fear is less. War cries and all that was cool off a little bit, right? But yeah, US market Fed commentary is also bullish. Not bullish, non-hawkish at least. No? US guys are showing some green. No? You can see the US Dow Jones is showing some green. Right, so it has fallen down and now it is moving up just like our markets. So US bond yield and all is spiking up and all is also slightly spiking up, but the crude oil is cooled off. That's really good thing for the non-oil marketing. US rupee is still on the top danger levels. Oil is cooled off. Gold also is, as a hedging instrument, it has hit the resistance and cooled off. So that's what it is. So overall, some calm has come. Right? Is it the calm before the storm? Never know. But there is selling pressure for sure. Market is unable to move further up. Now it has got a lot of resistance to it. It's taking slow. Taking it slow. This all small bodies indicate the big fight to overcome the initial 20 expansion moving average. Once that is cleared, candle size has started growing big, but selling pressure definitely right at the resistance zone where we are marked. So gotta be cautious. Technically, the charts are weak still, right? Across sector, pharma, realty, and metal and FMCG did well. Pharma is really done well. Government, realty, and momentum bullish zones on the short term, but IT underperformed slightly. Overall, sectors are all in sideways mostly on the short term. So, investors, every dip is an opportunity to invest in SIP mode on quality stocks. Traders has to be cautious because you never know whether it's going to be another lower, low, lower high pattern that's going to take its next leg. You never know. Or is it going to breach? So it's very indecisive whether it will be able to crack above the price action bearish levels into the bull zones. How fast, how quick, when, which, we never know that. But there is selling pressure for sure. Be cautious. It could break out or it could break down. So that way you should be cautious with respect to position size, manage your risk well. Make a note of the big spikes, huge spikes towards 20, stay away or cut short drastically your position size and manage your risk, right? Always hedge your position. So that's all I can do. So overall, the market view is neutral to slightly bearish until that is taken. So play it safe and happy trading, happy learning, happy investing. Bye bye.